Hi, Ameya. Yeah, loud and clear. Thanks. So, guys, today's session would be for 45 minutes. So, without wasting any time, we welcome Ameya and thank you, Ameya, for agreeing for our request. You are also getting so many requests for this session, and even I was getting DM people to invite you. So, again, guys, today's session would be more about the recent developments in IT sector and the structural changes happening, right? So, in the opening note, Ameya will be share his insights on around this, and after that, we'll be taking questions. So, make sure you ask questions to the point, and please avoid direct stock recommendations. Right. So, Ameya, welcome again, and over to you. How you see the recent developments happening in the sector? Any structural changes? And I mean, many companies have declared their results. So, how you see those results? So, yeah, over to you, Ameya.
Thank you so much, Prince. And also thank you, Ravindra sir. First of all, apologies, Prince. We couldn't plan this earlier. The work keeps on, piling up. So it's really difficult to spare time weekends also. Yeah, I mean, just to get on to the subject directly. So let's get a few things clear. Okay, so first of all, uh, I will come to all the topics eventually. So there is no sign of demand tapering. Okay, so there is no sign of budgets being cut. That's very clear looking at the numbers, looking at the management commentaries. Uh, there is one specific factor that's playing out at the moment, which is affecting the sentiments, and that's the macroeconomics, right? The cautious global outlook. What it means is the budget will be allocated more wisely. So if you look at the period of last 2 3 years, the budget was more broad based, right? But now going forward, it will be allocated more wisely. This means the growth which was we saw, across the pockets, across the tiers, that may not be the case going a couple of years down the line, right? So that's what basically we're talking about the the growth consolidation or the vendor consolidation, and that has a direct impact on the tiers and the IT companies which are part of those individual tiers, right? So in the previous space that we had back somewhere back in last year, I believe, we touched based on a point specifically that in in the COVID period, the demand was so much, right? So if you look at the demand as a funnel, the demand was so much that the frontline companies couldn't actually cater to everything. So they reprioritize on which demands to serve first, which accounts to take in, what is the margin driving accounts, what are the value accretive contracts that are coming up, what are the long term contracts. So they kind of focused on those aspects when it came to catering to demand. That means lot of fringe level or edge level demand that kept on percolating from tier 1 to tier 2, tier 2 to tier 3, and tier 3 to tier 4. So whenever such things happen, what happens is the companies having lower base, they grow in terms of price much ahead of the tier 1 and tier 2 companies. And that's what we actually saw happening. You saw Happiest Mind, for example, become 4 5x over a period of time. Compared to tier 1 companies, the companies like LTI, they become 5 6 7x, right? So the smaller base effect, when I always talk about smaller base effect, it's exactly that, right? So when we talk about microeconomics, it's very obvious that the customer will have a cautious outlook, and it's not only with the IT spends. Even if you look at the core industries, right? So since we all work in IT, we have customers who are from core industries. Someone could be from retail, utilities, manufacturing, consumer, and so on, right? So if you look at your own customers for that matter, you will see that they are also cautious in terms of their work, right? So what does this mean is the companies so the companies, who are positioned well, who have full stack capabilities, who are process oriented, who have already productized a lot of their services, they will benefit going down the line. And it's very clear that the attrition has peaked out. It's very very clear, right? And if you look at the bottom of the tier 2 and tier 3 companies, that's where the more cautious is. So if you look at some of the recent reports coming up from the research agencies about the overall IT as a sector, you would see that the bottom of the tier 2 or start of the tier 3 companies like Birla Soft and these kind of companies, they are actually, saying that our customers are more cautious. And if you look at the frontline companies, for that matter, the companies who are trying to get from tier two to tier one, the tier shift, they are saying that we are not seeing any kind of demand tapering, any kind of budget spread, right? So the point I'm trying to drive here is you cannot look at certain pockets of the company and decide the entire outlook of the sector, right? So you have to identify where the budgets are getting allocated and stay with such businesses, right? So that's the key. And also there is a question that I always keep on getting from many folks, that they are not able to make up their mind, as to, out of the frontline companies and the tier two companies, which one exactly to buy, right? Uh, so my answer is this. So this is a twofold answer. First, are you already invested in tier one names since long? In that case, your holding cost will be very low, right? And I assume that you would be you would be invested for more than 5 years in this case. So your entry and time spent staying invested itself, in will generate an alpha, right? But that does not mean you will generate a multiple from here, but you will have a far better growth than others. And also the second is, do you understand the sector? If you don't, then don't take unnecessary risk. Don't be adventurous looking at smaller based companies in hope of a multiple. कि अभी 200 करोड़ पे मिल रहा है, 400 करोड़ पे मिल रहा है, 600 800 करोड़ 1000 करोड़ का हो जाएगा, then we'll have like two bagger, three five bagger. We are not in that kind of phase anymore. That phase was 3 years ago. It's not that kind of a phase anymore. It's a phase where the consolidation on the capabilities, consolidation on the positioning happening very strategically. The allocation of budget is also happening very strategically, and you have to be, you have to follow that, right? So if you are someone who loves consistency and stability, simply go with the tier one frontliners. And if you don't understand the sector, then as I said, your focus must be on how budget spends are allocated, where the money is flowing, right? And you will be in a position eventually to appreciate a smaller base effect better than the most in this case, right? So in this case, my point is, if you can identify tier two or tier three companies who are positioned well, if you remember Prince and Ravi Bhai, in our previous spaces, I'll also talk about importance of positioning. Right? So take Wipro for example, or take M, or even Mustang. Wipro has somehow slipped down the value chain. If you look at the kind of the projects that they are serving, the share of AMS work is growing very significantly more than the implementation work. And to be very honest, well, I'm not writing off any company from the investment perspective, but the company who isn't positioned right will not grow even if the sector performs, period, as simple as that. So, finally coming back to the main question, I would say look at these factors: your age, understanding of the sector, allocation, phase you are in the investing journey, and then pick a company, right? So, if I take specific case, in my case, I wanted a company which will at least partly replicate the growth trajectory that our frontline companies have had in the past, right? So similarly, someone who is holding HCL, for example, from 350, 400 odd levels, it's nothing to worry, right? In fact, given how their ER&D business is going, I'm sure it will be a candidate of significant re-rating. But remember that the re-rating will be directly proportional to the base effect. So I won't expect it to run like an LXSI, even if they manage to post stellar numbers, right? And just while we are talking, the run in ELXSI was mainly driven by the global index inclusion, right? So a lot of money was supposed to get into it due to such inclusions. Now coming to the point that you raised, what from here, right? So first, I clearly see better utilization of the hired resources. I don't see, very expanding kind of hiring speed, because what has happened is, you see this question also, this management gets asked a lot of time from the journalists, that did you overestimated the demand and you ended up hiring more people, right? And because of that, you're not hiring as aggressively that you initially planned to, right? So that situation may be actually playing out. And the third point, which is very important, and which is one of the changes that's happening now, is the companies are able to pass on certain, even increasing part of the pricing effectively compared to the COVID period, right? So when we talk about pricing, you have to look at it from a various structural ways. So there are new engagements, there are existing engagements. So the pricing on these two factors changes. So if there is a new engagement, you have a lot of scope to pass on your pricing, increase pricing. If it's a new engagement, it becomes a little difficult. Right? Sorry, existing engagement, it becomes a little difficult unless you are adding certain extra value to the table. Now, that said, please remember the positioning aspect. As I said, the growth will be selective and not broad based. So, we are in such a period where vendor consolidation is happening, growth is getting in pockets. And if some companies invest now in the positioning, then there is a key risk of not realizing any yield from this for at least next 2 3 years. Why the question is, why would a customer come to you if your capability is just new over someone who has a capability over last 3 4 5 years, right? And since you have already done major capital allocation in the positioning, which can be organic or inorganic, and most of the companies are doing it in inorganic way now, because growing the capability organic way takes a lot more time. So any account level normalization, if that happens, that would mean that you're looking at a major margin compression, right? It may happen or it may not. So companies have operating levers to pull. And I would also say we are not really decoupled from the Nasdaq, specifically when we are talking about the IT sector, and that's a fact. And I keep on saying the frontline pack isn't a true representative of the future, right? So you will make money when there is a tier shift. That is when a company that is placed currently in tier three, for example, and it moves strategically to tier two. So if you can envision this, get in early, stay in invested for 5 6 7 years, you would see how amazing growth you would get. So when you come out at the other end of the things, you get into a position where your allocation is right, your price wise margin of safety is great, and because of allocation, the dividend is also meaningful. So right, a dividend on a right allocation is the key to focus on, right? So dividend should be the primary criteria. And if you look at the recent result from Infosys, we talked about the low hanging fruit of the subcon costs. We saw that we talked about that in Jan, and you saw Nifty actually, Infy actually saved 40 bps margin from cutting the subcon cost. That's the case with TCS also. LTI also lost a lot of volume in the previous quarters because of the on-site slippages. So that's one key aspect that I am looking forward to understand how they have done in this quarter's results. So these levels are at play. And finally, coming to the point where many say worst is yet to come, I would just say this: if a result is a rear view mirror, then the price is a forward-looking point, right? So a lot is factored in. I don't see much cuts beyond 10 15% from here, and that too in case of global crowd. So the given kind of numbers that you're seeing, I think that I do think that we are very close to bottoming out on the sector level. The pessimism on the sector is extreme. You listen to any space, the speakers will say you will not make any money in IT ever. Such statements and the micro level comparisons and to draw how weak our sector is. And I'm sure things can get worse than this. I said things can't get worse than this. And I'm a bit about the business, right? So I'll just quickly sum up my opening note with saying this, that you have to understand one thing very clearly. IT is not like how it was back a decade ago. Let's not even go back to 2000. It's not even same like how it was a decade ago. The context is very different. I talked about this in spaces previously. I also talked in the SOIC deep dive webinar. So there is a strategic change the way companies do contracting, companies do licensing, perpetual versus how today's licensing and contracting happens. That means the companies who were previously market followers का मतलब क्या है, like यार, if there is some new technology or some new thing has come up to the market, companies usually used to wait for the biggies to adopt that, and they would learn from that mistake कि क्या नहीं करना है, right? And जब वो product एक थोड़ा सा mature हो जाता है over a period of time, that's when they actually get in and allocate budgets to that. Now, because of this very strategic change, the way your total cost of ownership has reduced so significantly because of the cloud and the licensing changes and the contracting changes, your TCO is very, very less. So that means the companies are no longer market followers. They don't have to wait for something to get mature. The risk is very less. You can get out with minimal bleeding if things don't work out for you. Previously, it wasn't like that. And COVID actually made companies aware that they need to be closer to the customers. And when I say companies, it's not IT companies, the customers of the IT companies, the core industries, right? So they have to keep closer to the customers, keep listening to their ever-changing behavior and the demand all the time, right? And go back quickly to change your offering, assortment, product specification, and basically that all is done to stay ahead of your peers, right? The lever to growth is through IT now. That's the strategic change that has happened if you compare, right, to the previous decade for these companies. Traditionally, the customer of these IT companies were also not that tech savvy, right? But with internet, 4G, 5G, IoT, industrial IoT, clouds, things have drastically changed. And I just say in the end, how can you expect things to be like 2008 or 2010? How can you expect companies to go back to 10-year-old valuations? That's absurd. And those who understand, don't understand what strategically has changed in the IT, they'll keep on pushing this narrative कि 10 साल पहले का तो वैल्यूएशन ऐसा था, 10 साल पहले ऐसा दिखता था, अब ऐसा दिख रहा है. It may happen that the narrative actually gets played out, but if that happens, it's a great opportunity because the market is not only misunderstanding the strategic change that has happened, it's also mispositioning a sector, right? So I mean, that's all I would say. Looking at the numbers of Infosys, TCS, and HCL Tech specifically, it's very clear that companies, the levers that the companies said that they will be pulling are actually working, right? So the margin expansion in case of Infosys, that's a clear sign of that. HCL Tech clawing back their services revenue, it's a clear sign of that. So there may be 1 or 2 quarter off here and there. Okay, ऐसा definitely हो सकता है. But that does not mean that based on the performance of couple of quarters, you would decide your long-term investment thesis. Here, ये sector तो it has gone to dogs and it's not investable at all. That's not really the case. So more results are lined up. Unfortunately, Wipro, Cyient results were actually not up to the mark. I would say. Mindtree was phenomenal. I think today we also have LTI in numbers, or today or tomorrow. I don't know exactly when that is. I think it's today. So yeah, that's my view, Prince. Sorry for making that too long.
No, no, it was great, Ameya, and LTI just announced, and the results appear to be good. Yeah, Ravi, you have.
Yeah, Ameya, when you are talking about, say, large IT companies changing tiers, say for anyone listening on the call, how a person who is less knowledgeable on IT sector, what are the parameters he can track? If you can give the name directly, then so it's very good. But otherwise, say any company is changing a sector mix which they report, or something like large to smaller account mix which they report. What kind of trend one should follow to understand the company is improving on the tier, it's moving from tier 2 to tier 1, or something like companies reducing from tier 1 to tier 2, apart from margin and those things which we look. And the second question is, you started talking about happiest mind and root. What kind of growth you see for these companies for 3 years, 5 years time, and what should be a stable kind of margin and maybe multiple for these companies? Have they overly priced right now? Any view there?
Right. So first question is very interesting, and so there are a couple of factors that you can look at, right? As you correctly said, the account mix is can be definitely one of the parameters. These all companies, they keep on reporting their top 10, top 20, top 30 customers, right? They also keep on reporting that the top 10 customers से कितना percentage of revenue हम लोग drive कर रहे हैं. So the revenue concentration is another aspect. So as companies start, moving up the value chain from one tier to another tier, you see that the revenue by geography and the revenue by customers, top customers, that slowly starts getting distributed across. It doesn't remain very concentrated. So that's one of the points. Second is the deal sizes. So if you listen to the companies, for somebody, the large deal size is of 30 million. But for somebody else, the large deal size is of 50 million, right? So the deal sizes is also one of the key factors to identify. So for example, there is a company who used to be in tier 3 earlier, and for them the large deal size was 5 million. And couple of years down the line now, they are saying that the large deal size for us is 15 million. It's a clear sign, that they are able to get their foot strongly in the door, not only in the door, but they are able to also cross sell and make more from their existing engagements with the customers. So these are some of the factors that you can actually have a look at. When it comes to the numbers, see, it's an ocean. There are so many companies operating. And actually, if you go to Mumbai or Pune or Hyderabad, Bangalore, you would actually see 1 BHK, 2 BHK में ज़्यादा companies चलती है rather than campuses बड़े बड़े, right? So so what you can do is there are sectoral reports which are released by some of the very very good research agencies. You can actually go and have a look वहाँ पे कि these actually sectoral reports or thematic reports, they usually report uh, these changing parameters. Like for example, earlier the revenue mix, on-site offshore mix was that couple of years ago. Now it is changing, and so on and so forth. And of course, another the easiest parameters, but of course that cannot be taken for granted, is the increase in the market cap, right? So if you have the combination of your the change in the deal size, the change in the customer revenue concentration by geographies, account mix, as you correctly said, then your on-site offshore mix, then the mix of your contract, the kind of contracts that you basically get in. Um, the engagement with the existing accounts, that's also another aspect. So if customer really loves you and likes the way you are serving them, so the incremental business from those customers will also keep on growing. So some companies also report these numbers in ARs, or you can get on a con call and actually ask them that you know if you can report these numbers, like new engagements में से आपका revenue इतना है, existing engagements में revenue कितना है. Some companies do report that. If some companies are not reporting that, these thematic reports by research agencies, they have all these details. So somebody who is not very closely tracking the sector, they can actually start reading these thematic reports, make a list of companies that they really want to track, list down these three, four, five parameters, go back to last 3, 4 years of annual reports, and try and find out कि पहले कंपनी क्या बोलती थी और अब कंपनी क्या बोल रही है इन पैरामीटर्स पे. So there will be very visible, names would be popping up to you that these companies actually, growing up the value chain when we're talking about tier, not exactly the entire product and IT services value chain, but this is how I would look at things. Okay. It's not something unfortunately readily available. You have to put in a lot of efforts doing this, but every sector demands some or the other kind of study like this, right? So this is how I would look at. Talking about, I think you asked about happiest mind and what people or price point I'm looking at, right?
Yeah,
Um,
happiest and root mobile.
okay, so so to be very honest, I'm a little surprised the way Root Mobile is doing some of the some of the decisions that they have recently made. So I am someone who would like to see a company have a stable vision and a stable strategy, rather than randomly changing some things. You are just listed. Why do you need to do a buyback? Why do you need to do a QIP? So my view, to be very honest, it's not that very positive on Root Mobile. For I think they are in a phase where they are learning कि क्या नहीं करना चाहिए, and even the great companies like ELXSI have gone through the similar phase. So I would like to see these new companies, report a strategic direction, stable direction for next couple of years. उसके बाद probably will say, whether these companies are worth investing for a long term or not. When it comes to happiest mind, see, you know, I really don't want to go down that line, to be very honest. But I think it's very expensive at this moment, given the kind of work that they are doing. Lot of work that they are doing is very traditionally done by most of the other companies as well, but that's getting positioned very differently. Um, so yeah, I mean, let's see, Ravi bhai, I don't have a very concrete answer to that question. I'm sorry for that.
No problem, no problem. Acha, one thing on margin. It's a conflicting kind of question. Say one side, I would say there is now we are seeing real inflation in developed market, right? The wage inflation and everything. Do it helps IT companies in terms of getting higher dollar revenue, higher dollar EBITDA? On the other side, if I say what you mentioned, that company will ask for nearshoring, or even if you see narrative from any country, it is more towards inward looking. So can they restrict expansion for IT companies or reduce margin for IT companies? What's your view on both sides of this?
Right. So you correctly said that the inflation and the dollar cost or dollar EBITDA impact kya hoga karke. But the thing is that would get nullified because of the increasing expenses that are coming in through the uh, the recruitment activities or increasing subcon cost. But जो अभी recently reduce होना शुरू हो चुका है. Another thing which I'm noticing is the hiring in some of the companies like Poland and Romania. When we talk about on-site hiring, right, that's actually growing very significantly. The hiring in Portugal is also going up very very significantly. मैंने बहुत like 2-3 साल पहले तक मैंने पोर्तुगल में रिक्रूटमेंट इतना significantly ऊपर जाते हुए नहीं देखा था. The recruitment in Spain is going on very high because the salary structure and the expenses in Spain is very low compared to the rest of the Europe. So when companies are actually looking to hire and to maintain their existing margin profiles, they are moving away from recruiting people primarily in the the major part of the developed countries like Germany, UK, Ireland, so on, and they are now moving to these side countries जहाँ पे the cost of recruitment is much lower. So if you look at any company, IT company, कोई भी बड़ा company ले लो, TCS ले लो या Mindtree ले लो, you would see that their recruitment in these companies is actually growing up. There are companies here in Germany who are moving their employees recruitment to South Africa, Chile, Romania, and so on and so forth. So specifically talking about on-site margins, I think ये जो change हो रहा है strategically that would help them to keep the stable margin profile which they earlier had. And second thing is there is lot of issue because of the visa and the travel related concerns. You can clearly see US visa का waiting period कितना है. The same is the case with some of the countries in Europe. उतना ज़्यादा लंबा नहीं है, but it has increased very significantly. So because of that, companies were forced to hire subcontractors. That's actually stabilizing now. So what I see a very stable outlook is like 18 to 20% of margin profile is very very easy for these companies to report for next couple of years. Very easy, given everything that's happening.
Ameya, I think we lost you. We couldn't hear from last 30 seconds.
Oh, last 30 seconds.
Just
Yeah, yeah.
after the margin, 15-18% margin you were talking. After that, we
Yeah.
lost you.
I just said that 18 to 20% margin profile बहुत realistic है next couple of years के लिए, given the regardless of whatever we are seeing at the moment. That's
One
where
thing,
actually I stopped.
okay, okay. One thing, you were talking about some research and industry research. Any publisher you can point out or where we can locate them?
I will go back and find out the names, Ravi bhai. I don't have those handy at the moment with me. But there are certain thematic investment research companies that I follow. One is BK Security. I follow them very closely. Um, and I will go back and find out more names and I'll share maybe on over tweet or something.
Okay, we have Charanjeev ji with us. He can unmute and ask his question. And guys, if you have any questions, you can write in comments or send in a request.
Hi, Ameya. Thanks for taking my question, Prince. My question, Ameya, is regarding this Chennai-based this financial technology company. So, if I see some of your tweets, you have some red flags regarding that company. My disclosure: I am not invested in that company. I have my red flags, which is related with management quality, nothing to do with their business. I couldn't find that. So being an outsider, if you can elaborate those red flags in a simple language, it will be very helpful for us. That what are exactly technical concern which you see with them?
Sorry, I don't know whether it's just me or someone else, but I couldn't hear the entire question. Um,
Okay, I can repeat.
Yes, please,
Yeah,
sir.
yeah. So my question is regarding this Chennai-based financial technology company. So there, there in your tweets, I see that you have some concerns there with that business of that company. You have some red flags over there. As a disclaimer, I am not invested in that company. I also have seen some red flags, but my red flags are related to management quality. I am not an IT expert, but since I have studied this company a little bit, I would like to learn from you. What are your red flags so that we can, I can see this thing that what exactly are the concerns over there.
Okay, I'll try to navigate this question very diplomatically because I really don't want to cross over the boundaries because it's a public space. But the
Yeah,
first
sure.
aspect that you talked about, sir, it's very clear. So I also agree on that point. Second thing is, see, when companies usually report licensing deals or the deal win, that's only the probably the 30 one third part of the entire revenue opportunity that a company is targeting. Only one third. Then the rest of the one third is in the implementation, and the rest of the one third is in the basically the annuity and the maintenance activities, right? So that's how typically looking at one third, one third, one third, and some companies may have ये one third का one fourth किसी का होगा and so on. The point is the feedback I was getting from some of my industry connects is the licensing deal wins were not translating into implementation. Okay. Uh, so the question then comes is when you are in a situation जहाँ पे global spends और the budget allocations उतने ज़्यादा कट तो कट भी नहीं हुए हैं. We are in a phase of a plenty, right? We were in a phase of plenty. So if somebody is spending close to $1 million to buy a license from you, why would that customer sit on a license and not implement it? So there could be many reasons to it. If there is anybody who has spent more time in the industry, please enlighten me. I'll also learn from you. But this is one feedback I was consistently getting. They got recently dropped from one of the Gartner's Magic Quadrant. एक चीज जो मुझे बहुत odd लग रही थी, it's a combination of multiple things, sir. So if you look at whenever they used to announce any major deal with a certain company, if you take a chart and keep it aside on these specific occasions, you would see उसी टाइम पे मेजर सेलिंग आता था मार्केट में, बट प्राइस को बराबर से मैनेज किया जाता था एक हाई लेवल पे, एक्सपर्ट पर्टिकुलर लेवल पे. And I'm being a trader, I found that to be honest, very odd, to be very odd, because बड़े बड़े नाम है, छोटे नाम नहीं है, right? So whoever were actually announcing the deal wins. So that was one of the activity, one of the point. And third point, which I found very odd, is if you look at a couple of years ago, the kind of language company was talking about, the kind of language company is talking about. It's not realistically possible for somebody to immediately become a SaaS company and start reporting only certain metrics in SaaS over a period, just like on the fly. It's a strategically you transition. If initially आपके on-premise solution है, then you launch a cloud solution, then gradually you go to a SaaS, or if you are a native digital, then you directly start with a SaaS, right? There is no midway between these two things here. So my view was they were never ready to be a SaaS company. They were forced by market to position like that. ये मेरा personal view है जिसके वजह से I expressed the comments. But as I said, please take my view with a pinch of a salt. There could be many people who are more experienced than I am, and they may be knowing way more than I am. I know. So please take it with that.
Thanks, Ameya. It helps. I had something similar observations. Just to give you an example for the benefit of larger audience, say for example, I didn't invested being a non-technical person because of only one statement. There was some acquisition of Indian insider trading. SEBI put up penalty of 1.36 crore, and the promoter paid the penalty only because he said that I have reason to pay is because I want to focus more on business. For me, that was credibility loss was much bigger than 1.36 crore. So that was my reason of not investing. But your insight helps a lot on that. Thank you.
That has happened in DV Labs also, okay, sir. So I don't know how
Yeah.
everybody looks at these things differently. I believe that's how.
Uh, okay. Okay. Great. Thank you.
Thank you,
Thank
Charanjit
you.
ji. So, Ameya, the ER&D space, people are not, clearly understanding the space, and even the life cycle you talked about. In IT, we have short life cycle, and in ER&D space, we have long. So, would you like to touch upon the risk which our audiences should keep in mind before playing the space, and how you see this space evolving in next 2 3 years down the line?
Well, space will evolve very, very significantly in my view. As I said, like in previous spaces, I said that if IT was the COVID beneficiary, the ER&D is the post-COVID beneficiary. Okay? And see that the problem is, ER&D spends is what is ER&D? It's IT plus OT, right? So you need a lot of operational technology also, not only IT. So IT is only one of the part of the ER&D because that you need a software eventually to drive whatever the operational technologies that you are deploying, right? So it's IT plus OT, and because these ER&D projects are directly coming from the core digitization of these traditional companies, manufacturing companies and the industries, जो भी ग्लोबली सिचुएशन होती है उसका डायरेक्ट इम्पैक्ट होता है उन लोगों के कॉन्ट्रैक्टिंग पे, right? So it may happen that the companies are forced to focus on some other pocket to keep a plant running rather than issuing an ER&D contract, right? So initially you saw US-China trade war actually impacted very significantly on the performance of these ER&D companies. Then trade war settled down, and then COVID happened. COVID happened, and none of these traditional companies were actually equipped to keep their operations running regardless, right? So that actually has brought in the awareness that we need to transform our OT, our operations. We cannot keep on doing business the traditional way that we were doing, right? Again, being closer to the customer, you should be in a position to understand how your product is being accepted in the market. Go back quickly to the assembly line, change certain part of it, simulate it, integrate it, and then actually trigger the production of it, right? So पहले का ये जो life cycle था ये बहुत लंबा था, right? That life cycle is actually getting shortened because of the ER&D and the OT transformations, right? So the one of the risk is always global. So अगर global situations थोड़ी सी muted है, negative है, so that will always have an impact on the growth of the ER&D companies, more impact compared to the IT companies. That's first view. Second view is the contracts that ER&D companies usually issue. They have a different tenure over, compared to the contracts that IT companies get. So IT companies may you have benchmark based contracting, benchmark based billing and incentives, and बहुत सारे types है उसमें. There is no one type that we can really talk about. But you can actually realize your revenue in short stints much earlier compared to how you would realize in ER&D companies case, because there is a lot of operational aspect also involved. So that is one of the reasons जिसकी वजह से थोड़ा सा जो contract का life cycle होता है ER&D company में वो थोड़ा सा लंबा हो जाता है, right? So that is another aspect. Second aspect is ER&D companies can't really afford to have a high bench because it's a special talent, it's a niche talent, and you cannot hire like usually you would go on hiring like an IT company. You just can't do that. And if you end up hiring just too much, and if the demand and the actual revenue is not matching up to that, then you would see a very significant impact on the business. And the second thing is you really have to look at it. The positioning of the company. So if you look at ELXSI, it's a focused ER&D company. If you look at LTTS, it's a diversified ER&D company. If you look at KPIT, it's a sector-specific ER&D company, right? Similar to Tata Technologies, probably. Not Tata Technologies, but somewhere sector-specific. So all these companies go through a journey. So if you look at ELXSI, from it's listed somewhere in, I don't remember, it's listed in 96, believe, right? If anybody knows. But it's listed 15 plus years ago. And they were also a diversified company before. Over a period of time, after making series of mistakes, they understood which sectors to focus on. And that's how they have finally come to what they have at the moment. That's what we call a delivery excellence, right? Delivery maturity. That's what we call the reason why ELXSI is able to command such margins over, compared to any other ER&D company is because of the delivery maturity. And that's the single reason of the margins, I would say. And when we say delivery maturity, that means you can very easy on the fly tweak कर सकते हो कि मेरा margin profile केस में मेरे को क्या क्या changes करने हैं. I have lot of levers available to do that. But for a diversified ER&D company, that is not possible. And if you look at LTTS journey as well since listing, they started बहुत ज़्यादा diversified थे. They were dependent on a parent for their growth and revenues. Uh, Slowly parent ने उसका हाथ छोड़ा, then they started looking for work on their own, and now they have shortlisted the 6 areas that we really want to focus. So it's a journey, and the journey is something that ELXS has also gone through it, and LTTS is also going through it. When it comes to KPIT, I love the company, to be very honest. I don't have anything against it, but एक थोड़ा सा मेरे को रिस्क वही लगता है कि ये जो ओवरऑल ग्लोबल एक सिंगल सेक्टर पे डिपेंडेंस है, द ओनली द मार्जिन ऑफ सेफ्टी यू हैव इज योर एंट्री प्राइस. इफ योर एंट्री प्राइस इज टू हाई, एंड ये जो भी ईवी एंड ऑल दीज, ये जो भी हम लोग बात कर रहे हैं, उसमें थोड़ा सा भी किसी भी रीजन से softening आता है, we may see a very significant impact on the margins of these companies. So there is a very clear risk here sector का. So if you are someone who would like to go with a diversified company that is slowly trying to focus and find out their niche, to go with LTS. If you need company who has achieved all these things and need a stable ER&D company, you can go with DLXSI. Or if you need a company who has the combination of both services and ER&D, then you can actually look at Infosys and HCL. Even Wipro has certain ER&D, pockets which are growing phenomenally well. But this is how I'm actually looking at ER&D companies. But they will do phenomenally well over a period of 3, 4, 5 years down the line.
Great, great. So, Ameya, we are already 4:45. So, shall we take one last question, or shall we keep it for next time?
We can continue for 15 minutes, no worries.
Okay, okay, great. So the question is from Vibhor Vash. He is asking on Newgen. He wanted to know how successful they are improving at their current products, introducing new ones, and why they can outlive foreign companies with similar products.
They can't. They will not. At least with the given portfolio, they can't. So see, you have to see, Newgen का solution offering कैसा है, right? So they primarily have two products or two segments, which is on the fringe of the business. So see, when it comes to a product company, you will grow much better if your products are impacting core business of your customer. But if you are someone जिनके products जो कंपनी का जो एज है, एज प्रोसेसेस है, उसके ऊपर फोकस्ड है, तो आपका जो रेवेन्यू है उतना स्टेबल नहीं रहेगा. सो इफ यू लुक एट न्यूजेंस नंबर्स आल्सो, यू विल सी सम शिफ्ट इन द रेवेन्यूज, वेरी कभी पीक होता है, कभी नीचे आता है. दैट इज द रीजन ऑफ दैट, बिकॉज their product are primarily in the two segments. One is ECM, which is enterprise content management, and one is CCM, which is the communication management related. So if you do a simple Google search about these companies, you will see the biggies who actually dominate this space are like OpenText and Kofax and Adobe and so on, right? So these companies that dominate this space outright. So फिर Newgen के पास में business कहाँ से आता है? Through their channel partners. So they have channel partners like Deloitte, KPMG, Boston Consulting. So whenever a company, traditional company, कोई भी ले लो, Sun Pharma ले लो, for example, I'm just giving an example. So Sun Pharma wants to do, transform their business, and they go to McKinsey, for example, or Deloitte with one statement that over a 4 or 5 year period, I want to increase my revenue every year by 10%. How do I do that? They go to Deloitte and KPMG like this single statement. And these companies eventually start breaking down that into multiple streams of operational transformation, digital transformation, technology transformation, and so on and so forth. And when they break this down to multiple streams, when it comes to the stream where Newgen is operating, they make a recommendation that we think that Newgen will fit your needs. Have a look. In that case, Newgen makes a sale. Their dependence, they also have some dependence on government contracts. If you look at their website, it's very clearly available there. So my view is their growth is dependent or linked with the growth of their channel partners. That is one thing. And second thing, the space is dominated by open text Adobe, and it's very difficult to actually, outnumber them or outpass them or outlead them. For example, whatever out is that. So it's not realistic to expect that. And if you look historically, जो भी ऐसे low code on the fringe operating businesses थे, वो eventually कोई बड़ा company आके acquire करके लेके चला जाता था, right? So if you look in the enterprise space, Salesforce has done that with a lot of such small low code on the fringe, communication or the interfacing companies. SFDC has done that. Adobe has done that. SAP has done that. So this is how you should be looking at Newgen. It's not a company जो एकदम outrightly किसी product company के जैसे grow करेगा, because primarily इनके business process flow, workflow, communication management, notification management, incident management, document management, एक जो document का life cycle होता है enterprise में उसका management, they are primarily into this, and that's not a core, right? So you have to invest with this in mind.
All right. So, Bruce, you can unmute and ask your question.
Yeah, hi, Prince. Thank you for the opportunity. I don't understand technology much, but as an investor, if I want to play the technology, especially the US technology part, so I have option from India is to buy Nasdaq 100 or any FANG ETFs. But the problem there is they fall more than 30-35%. But because of dollar is strong, we cannot capture all the fall. So we are still getting 20 to 25% fall in Nasdaq sitting in India. So at this point, what is your view, Ameya, about investing in US technology stock sitting in India?
Well, I have actually expressed my view before, and I will also say this again: is I find great comfort investing in Indian companies. I love US companies for the technology and the sheer scale that they offer. But given the context and the limited capital that I have, it's not realistic for me to make a meaningful position in US stock. That is first thing. Second thing is, I understand my market, my geography, the customer profiles of the companies that the Indian companies serve way better than how these US technology companies serve, right? So that intangible aspect is also very important before deciding whether to invest in US stock or whether to invest domestically. So if you are somebody who is living in US and who is actually, day in day out, if you are looking at companies, the customers of these US tech companies, you understand that space very well. Sure, go ahead, and there is no reason to invest, not to invest in those companies, right? Uh, but the kind of comfort that I have, मुझे ना अपना market ज़्यादा समझ में आता है, to be very honest. And my personal view is that our companies will also keep on doing really really good. And also यार हमारी companies ना उतनी ज़्यादा गिरती नहीं है, ये like these companies कभी कुछ हो गया तो सीधा 20, 30, 40% down भी हो जाती है over a period of time. And you have to look at one thing very. So we talked about base effect when we were talking about the tiers and the specific to the IT companies, right? So I personally look at this, and I may be wrong. So please take that with that in mind. Is a technology business listed in a mature market is very different from a services business listed in a developing market. So अगर ये दोनों businesses को आप compare करोगे, you would actually see the service business would also give you a significantly better results. Eventually, everything finally boils down to how well you understand, for example, Google or Snowflake or Microsoft for that matter. If you understand all the moving parts that they have in these companies, all the different business lines, and if you understand the accounting methodology that these companies follow, US accounting methods, if you understand the US geography and all that, if you understand that really well, go ahead and invest there. But I am somebody, I don't understand all these things. Having worked in Indian IT and product companies for over 70, 80 years, I understand our market well, and that's where my money is.
Got it, Ameya. Thank you so much for answering my query. That is all.
Ameya, one question is on intellect design arena. So basically, question is where do you see in the growth life cycle where it is placed. The question is around this.
Oh, okay, good. So, if you look at their product portfolio and the management commentary, a year or two ago, they said that we are just starting monetizing our series of products that we have. Uh, and you will see over a period of time, lot many newer products coming to the market getting monetized. Uh, these are the products जिसमें existing R&D spends okay जा चुका है, and these products are now available for go to market and all that. So I think उनका GTS strategy चल रहा था 2 साल पहले. Uh, but I haven't seen any significant launches of new products as of now. So existing products could probably, because what happened is suddenly, every company was becoming a SaaS company. So probably their focus suddenly changed from launching more on new products into the market. They wanted to get their existing products repositioned, right? So if you look at the way they talk about their products like microservice and all, it's not a big thing in today's Asian time. And ICICI Bank has done that probably like 5 7 years ago, right? So um, monolith design to microservices changes. Then these guys basically talk a lot about these kind of aspects, right? So when it comes to the product specific growth, I think they have more products in line, but I would really wait and see कि वो कब market में आते हैं, कहाँ पे position किए गए हैं. So I think what happened is because of the SaaS and because of change in customers' requirement to consume a software, they had to reposition their existing offerings suddenly over a period of time. Maybe because of that, products have actually haven't come to the market yet. Uh, but if I were to take what management said, there will be newer products coming to the market, and it would be really exciting to see how they are positioned. But 2 years ago, they said that they're at the start of the monetizing their entire product portfolio. That was 2 years ago.
Right, Ameya. So, Ameya, one question is common to two, three people. So, I think we discussed this previously also. But again, LTI Mindtree merger and how the potential you see in coming next 3 to 5 years. What are the risks you envisage in the integration?
Well, see, though, whenever the integration happens or the merger happens, the first clash is of that of culture, right? Leadership conflicts, and that's why you saw Sanjay Jalona actually stepping out of the company. Because it was very evident that Devashish Chatterjee, who comes in with much more broader experience of handling organizations of larger scale, um, at helm with Mindtree, and then another hand you have Sanjay Jalona, who has grown this company from like 12 odd thousand crore company to a lakh 1 lakh crore plus kind of a company, right? So there was a clear, so failure is तो वही होता है management and जो pyramid clash होता है. So first risk of that, there is a risk of you losing really good people because some people cannot match. So ऐसा वो typically होता है, right? So if Debashish Chatterjee is going to be the CEO of the merged entity, probably the people who are close to him or people who are in the management of the Mindtree will may have an upper hand over the people who are at LTI. Right? I'm just giving you a scenario that may happen or may not happen. So that could mean that some of the good people from LTI may move on. So that is one of the risk, and that risk is associated with all kinds of mergers. You saw that risk playing out very negatively in case of Ultron. But L&T management was very prudent. They knew that merger ऐसे outrightly नहीं होते हैं. You need a gestation period. You need a certain calm down period जहाँ पे आपकी synergies, आपके आपका culture सारा align हो. So I think they gave enough time for that. Initial first 6 months or a year may be bumpy, but you see, they already announced joint deal wins, and there is no confusion about how operations and how the execution is going to happen when it comes to their customer perception about the merged entity. So there is no confusion in the market. That's very clear, and the merger is very synergistic. There is hardly any conflict when it comes to the accounts, the customers, or geographies, uh, verticals. So Mindtree is strong in certain vertical, LTI is strong in another vertical. So it's very complementary kind of a merger. And market may be a little cautious because merger ho raha hai, so initial 6 months nothing may happen. Um, but over a period of time, this is a very synergistic merger in my view, and I still stick to my view that the merged entity should replace Wipro in Nifty eventually.
Thanks, Ameya. So, Ameya, last two question, one from Senthil and one will be from Shiva. So, Senthil, you go first, and then I will ask.
Thank you first for the opportunity. Uh, I've been in market for the last 20 years and I missed a lot of IT rally simply because I don't understand it. And I'm also a contrarian bet. For the last 5 years, I've accumulated ITC for a pure consumption basis. The last 1 year, I've been accumulating ITBs since I'm not understanding the IT businesses as a whole because I've not concentrated learning about what does each company do. I want to know, but I of late I've accumulated also shares of Infosys, Wipro, and TCS on SIP basis. Um, can I have hold these companies for say another 10 to 15 years? Whether it will be a fruitful investment, and I also know felt taken back when Wipro fell 7% in a single day for. For a disappointing quarterly result is can you throw some light because I am investing for the first time in IT. I have no prior exposure to IT. I'm investing for the last only 7 to 1 year since IT index has been beaten heavily. And what is your opinion? I have this opinion that the inflationary thing happening in US and Europe will our IT companies able to charge more because of this inflation and inflationary scenario so that their bottom line could expand, or it will affect their business going forward. Can you please elaborate on this? Thank you.
Yes, sure. Thank you, Senthil, for this question. So first thing, I'll answer your second question first. Yes, the pricing pass through. If you look at the results from this quarter, it's very evident that pass through has improved a lot compared to past previous quarters. But that pricing pass through is sheerly inflation related. That means that companies will simply pass on the inflation related adjustments to the companies, um, but they may not necessarily look at that as an avenue to expand their margin. Okay, so because everybody knows that there are inflationary pressures, the customers know, and they are more receptive to these inflationary adjustments coming in the contracts, right? But that so there are also gray areas, like that they have certain fixed price contracts. For example, if there is no clause कि inflation related adjustments नहीं include होंगे, so there is always a risk. But some companies, they always have a margin of safety even in the fixed price contract. That is one aspect. There are certain companies, sorry, I'm digressing from the topic. There are certain companies like Tejas Networks, for example, who actually bid for a contract and the contract is of a fixed value. You give up your bid, right? So you give your bid. And because of the supply related pricing issues and the component related pricing pressure, you end up spending more to service that contract. So eventually that means there is a net loss in your books. So ये situation तेजस जैसे companies में definitely हो सकता है. But IT companies have started passing through prices more efficiently. The customer are more receptive, and it's very clear in all the results and the numbers and the commentary. So that answer to your second question. To answer your first question, I think since I think you're doing it correctly, you have ITPs plus you have individual stocks in your portfolio. But I'll talk about you have all these frontliners, which is very obvious because as you said, you don't understand the sector, and because of that, you bought these frontline companies. So क्या होता है ना, every IT company, if you look at their life journey, you would see that there is start hai, then exponential growth hai, and eventually over a period of time they hit a peak, and then there is a plateau. So when that happens, companies start doing buybacks and all these kind of activities. So Infosys doing buyback, TCS doing buyback, that is more to reward their existing shareholders. That's the activity companies जिन्होंने plateau hit किया हुआ है, they will start doing that. If you see a company जो recently list हुई है and it's less than like it's in the exponential growth phase, for example, is doing a buyback, that's a weird thing. So I would say avoid those companies. But I would also say that if you have a frontline companies already as individual stock positions, also have another company who has a small base effect, who is currently in the exponential growth phase. The companies that you are holding are all frontliner who have grown to a certain scale, right? So maybe you can think of having another company who is in that phase, maybe might be persistent, or instead of Wipro, you can move to HCL. I'm just giving you examples. Okay, these are not recommendations, so please don't take it
Okay,
like
okay,
that.
okay,
But
okay.
you can reposition like this.
And looking back to the ITBs also, but it was much more concentrated among the big players.
Yeah,
And
yeah.
yeah, right,
Exactly.
right. Yeah,
Exactly,
exactly.
exactly. So
Okay.
what's happening is you have that concentration in ITBs, and then you also are buying individual stocks in the same frontline concentration, right?
Yeah, I found that discovery only 2 months or month back. So I shifted my SIPs to Mindtree now. Uh,
Good.
yeah, right. What is your thought on certain companies? You use certain companies which are pure BPO play. They have the same positioning.
Well, to be very honest, I don't track the sector, BPO sector or process sector that closely, so can't really
Okay,
comment on that. Sorry.
okay,
Thank
okay. Thank you,
you,
thank
thank
you,
you. We are
thank
short on time, otherwise would have taken more questions. So last question for today, Ameya, and this is from Shiva. He's asking, given that many companies are setting up data centers in India, does Ameya see scope for network infrastructure providers like Tata Communication? What other opportunities are there in this space?
Hello.
Plus, any company which has more revenue concentration or business concentration on data center side.
Yeah, to be very honest, I tweeted about this some time ago because there was a tweet coming from India Tech Guide. They mentioned that India is expected to invest, about $20 billion on the data centers by 2025. And I think we have a lot of data center proxies which are currently listed. Like Techno Electric is one. Somebody said Jyoti Structure is another. There are some companies who also offer private cloud and private networking solutions. But I think the companies that will benefit even more are the companies who are operating in the infrastructure enablement of this specifically. There are many, right? Schneider Electric, Hitachi Energy, Cummins India, Kirloskar. So these kind of companies will benefit a lot from the data center boom that's happening or that's going to happen compared to the companies who are offering direct services on top of these. So Tata Communication, yes, definitely the growth will be there, but these other companies that we talked about probably will see better growth in these pockets.
Thank you, Ameya. Ravi, am I audible, right?
Yes, yes.
Okay, okay. So thank you, Mia. It's great having you again. And people were like, they just warmed up after 1 hour. So we have constraint on time. So guys, we thank
I'm
you,
so sorry. I
Mia,
have
for.
got hard stop, so I extended 15 minutes. I'm really sorry for that. Let's try to do another space sometime soon. I'm really sorry, short on time. So
Yeah, yeah, sure, sure.
apologies.
No issues. I was just saying that for initial 1 hour, it's warm up when you conduct sessions. So it's really heartwarming to understand the space so closely. Yeah, great to have you today. And guys, the previous space was recorded. I have pinned that space in today's this space. And this session is also recorded and will be shared with you all. So keep showering understand the sector better so as to grow as a more matured and learned investor. And Ameya has been kind enough to answer your queries on his handle also and through these spaces. So thank you again. Thank you, Ameya. Thank you, Ravi. And thank you all the listeners for keeping for so long.
Thank you so much, Prince and Ravi bhai. Thank you so much.
Thanks, Amaya.
Have a nice weekend. Bye.
Thank you, thank you. And guys, do check the handle of Ameya, those who are new, and you will find incredible data regarding the IT sector, and you will surely appreciate that. Thank you so much. Over for today. Good night.